Kia ora koutou katoa, and welcome to today's webinar. I'm Francesca from Charities Services, and I'm just going to talk a little bit about logistics and let you know how the webinar will run before I pass you over to Stuart from Inland Revenue. So first of all, can you hear us? You need to make sure your computer sound is unmuted. Ignore the muted microphone icon. If you have echoing or distortion coming through your speakers, then you should try using headphones instead, as this may help. If your sound is cutting out intermittently, then check your internet connection and maybe turn it off and on and see if that helps. This webinar is being recorded today, and you will receive a link to the recording after the webinar. We'll email it to you. Any other links or resources that we talk about during the webinar today will also be sent to you by email after the webinar. This is a listen-only webinar. So if you want to ask a question, click on the question mark icon to type your questions. Please type them throughout the webinar. We will have 4 speakers today, and they will answer questions at the end of each section. If your question doesn't get answered during the webinar, please email us at charities.queries@ird.gov.nz. If you want to download the handout, click on the document icon on the right panel of the screen. And we will have time for some questions at the end of the webinar. But if you don't get your question answered, remember you can email us at charities.queries@ird.gov.nz. I'm now going to hand over to Stuart, and he's going to take you through the rest.
Okay, good. Hi everyone, my name is Stuart Donaldson, and welcome to the first of a series of 3 webinars for charities and not-for-profits that carry out some of their purposes overseas. As you know, this webinar is focused on tax. If you are a tax-exempt registered charity or a not-for-profit and that is a donee organisation, and you carry out some of your purposes overseas, or you apply your funds to your purposes outside New Zealand, there are tax rules that you should be aware of. Over the next hour, we will provide an overview of what those rules are and also tell you about some student loan concessions that you may not have heard about before. We know that there are over 3,000 charities who have told Charities Services that they carry out some of their purposes overseas. So these rules can apply to quite a large number of charities and not-for-profits. There are several reasons why we thought it's a good idea to provide this webinar now. Firstly, over the last 12 months, Inland Revenue has published new guidance for donee organisations who apply some of their funds outside New Zealand. That guidance includes new interpretations, which will apply from April next year. So it is a good chance to help charities understand our new guidance. Secondly, our compliance staff have identified some not-for-profits and charities that haven't followed the rules or even been aware of some of these rules. So this is a chance to give a heads up about what rules you need to be aware of. Thirdly, we do receive questions from charities and not-for-profits about these rules from time to time, so we thought a webinar would be a good way to help everyone get it right from the start. Shortly, I'll pass you over to Tanya Salvo, who will talk you through our new guidance for donee organisations, followed by Brendan Sloan, who will talk you through the rules for obtaining overseas donee status. Then Annette Stenberg, who will cover the rules if your charity has business income and you have overseas purposes. At the end, I'll rejoin the webinar and let you know about the student loan concessions if your charity sends some of its volunteers overseas. Then we'll wrap up. Just a final reminder, you are welcome to type questions anytime during the session, so don't wait until the end. We'll do our best to answer your questions by replying to you online individually. But at the end of each topic, if we have time, the speaker will also answer some of the most common questions so that everyone can hear the response. I've got one more slide before I pass you over to Tanya, and that's our disclaimer. And this is just a common Inland Revenue disclaimer. The content of this presentation is a guide only, and it cannot be relied on or substituted for professional advice. So nothing in this presentation is binding on Inland Revenue. But having said that, I hope it's very useful. So I'll hand you over to Tanya.
Tēnā koutou katoa. Ko Tānea Salvau tōku ingoa, ko Ngāpui rawa ko Ngāti Whātua oku iwi. He kaiwhakahaere I te wāhanga whakatauna tūmatanui I te tari o roia taki mātua ahau. Greetings everyone, my name is Tānea Salvau. I am descended from the Ngāpui and Ngāti Whātua tribes from North Auckland. I am a manager in public rulings in the Office of the Chief Tax Counsel. It is a pleasure to talk to you today about 2 items of public guidance we have published about donee organisations. There are different types of donee organisations, such as community housing entities, public institutions, boards of trustees, tertiary education institutions, and public funds. Our items focus on 2 other types of donee organisations. As I'm sure you are aware, people making gifts of money of $5 or more to a donee organisation receive either a refundable donation tax credit or an income tax deduction. Therefore, being a donee organisation, which is sometimes described as having donee status, is important to charities and not-for-profits. The first item I will talk about is an interpretation statement we published last year for charities and not-for-profits whose funds are applied wholly or mainly to charitable, benevolent, philanthropic or cultural purposes within New Zealand. Now that's quite a mouthful. So instead of saying charitable, benevolent, philanthropic or cultural purposes, I will refer to specified purposes. The item explains the meaning of the terms and phrases that you can see underlined on the slide and explains why those meanings were adopted. While some may find the legal analysis in the interpretation statement interesting, we appreciate that not everyone feels the same way, so we also published a shorter fact sheet. Hopefully you will find that useful. This slide shows a summary of the meanings of the main terms for this type of donee organisation. Funds are the cash and cash equivalents of a charity or not-for-profit. Cash equivalents includes short-term investments. Funds can be applied by being spent or accumulated. Accumulated means the funds are either set aside for future spending or invested. There needs to be a decision at the appropriate level to apply funds to specified purposes within New Zealand. For example, a trustee resolution or setting up a special purpose bank account. It is important to know that where funds are spent is not relevant. I will repeat that. Where funds are spent is not relevant. It is possible to spend funds overseas to further specified purposes within New Zealand. It is also possible to spend funds in New Zealand to further overseas purposes. For example, a charity or not-for-profit may purchase and import goods from a foreign supplier. Although the purchase involves spending offshore, the reason for the purchase is to obtain goods that will advance specified purposes within New Zealand. Therefore, the spending is regarded as funds that have been applied to specified purposes within New Zealand. There must be a sufficient connection between the funds applied and furthering specified purposes within New Zealand. The connection is similar to the connection required for income tax deductions. Any incidental or consequential purposes achieved by applying the funds can be ignored. We have included 17 examples in our item to illustrate the connection needed. We hope they will be useful. New Zealand for this type of donee organisation does not include Niue, the Cook Islands, Tokelau or the Ross Dependency of Antarctica. It only includes the islands of New Zealand. There are different views on what is the correct meaning of wholly or mainly. They range from a bare majority of just over 50% to something closer to 100%. To give certainty to charities and not-for-profits, we decided to set a safe harbour of 75% or more from 1st of April 2019. What that means is that we will generally accept that a charity or not-for-profit who applies at least 75% of its funds to specified purposes within New Zealand meets the wholly or mainly requirement. The calculation method for the safe harbour has 3 steps. The first step is for a charity or not-for-profit to work out its total funds for an income year. Existing financial statements or performance reports can be used for this purpose. Total funds will be the cash on hand at the end of a year plus the cash spent during the year. The second step is to find the amount of funds that have been applied to specified purposes within New Zealand for that year. I will talk more about this step on the next slide. The third step is to find the safe harbour percentage, which is effectively the amount of funds applied to specified purposes within New Zealand divided by the total funds. In step 2, a charity or not-for-profit needs to work out how much of its total funds have been spent, invested, or set aside for specified purposes within New Zealand. Sorting its funds out into the 3 groups shown on the slide will help determine the amount. Funds that have been applied to a variety of purposes should be apportioned on a reasonable basis. We are allowing a similar way of apportioning for operating funds and amounts that cannot be apportioned on a reasonable basis. Essentially, these amounts can be apportioned on the same ratio established when the application of all the other funds is considered. Practically, this means that these funds can be ignored for the purposes of the safe harbour calculation. And just to clarify, I mean the operating funds and amounts that cannot be apportioned on a reasonable basis. We have a detailed example in our item and fact sheet to show how the safe harbour percentage is calculated, and we recommend you read this. We will allow some flexibility to recognise exceptional or unusual years. This is done by taking into account the safe harbour percentage of previous years. The table on the slide shows how this will work. The top half of the table shows that in the current year, which is the last column on the right, the safe harbour percentage has been calculated as 60%. Therefore, the current year would fail the safe harbour percentage of 75%. However, the bottom half of the table shows what happens when the previous 2 years are taken into account. The cumulative safe harbour percentage is 80%, and we will accept that percentage for the current year. The second item I will talk about is a recent question we've been asked about what is required to establish and maintain a fund exclusively for specified purposes within New Zealand. This type of donee organisation could be an option for a charity or not-for-profit who also has overseas purposes. We discuss the meaning of the terms underlined in the slide in our item. A fund can mean actual money or an accountancy expression like a reserve fund in the financial accounts. We decided a fund had to be actual money so that a charity or not-for-profit could provide goods and services to those needing help. It was apparent to us when we looked at the history of the provision that the purpose Parliament intended was to relieve government spending and to encourage donating to charities and not-for-profits. A fund could be established through book entries and a founding document that sets out the terms for the fund. The founding document could be a separate document, or changes could be made to the charities or not-for-profits founding or governing documents. There are a few things to bear in mind for maintaining a fund for specified purposes within New Zealand. Briefly, the book entries and the money in the fund should match up, and a separate bank account for the fund can help with this. The financial accounts should show the movements in the fund, like the opening balance, donations and expenditure for the year, and the closing balance. Remember that the fund must be used for the required purpose throughout its lifetime, and that includes when it is wound up. The requirement to maintain the fund exclusively for specified purposes within New Zealand is not as strict as it sounds. Any subordinate or incidental purposes of the charity or not-for-profit can be ignored. Lastly, I would recommend that you at least read the example in the item, which sets out best practice for establishing and maintaining a fund. During the presentation, there have been a few questions asked. One question is, can Inland Revenue add a link to the fact sheet that I mentioned? Yes, we absolutely can do that. And if you go to Inland Revenue's website, you will find that the fact sheet is just under the interpretation statement. The second question I have is, can the flexibility allow for less than 3 years, more than 3 years? And the answer to that is yes for less, but no for more. We did consider this as we thought through what we would permit, and we decided that 3 years was to be the maximum amount of years that we would allow to be looked at. Okay, well that's it from me. Nō reira, tēnā koutou, tēnā koutou, tēnā koutou katoa. I'll hand you now over to Brandon.
Tēnā koutou listeners, my name is Brandon Sloan and I'm a Principal Policy Advisor at Inland Revenue's Policy and Strategy Group. This afternoon I'm talking to you about overseas donee status for New Zealand charities who have purposes and activities outside New Zealand. The handout supporting this presentation has a number of links in this document to websites that will also be relevant. I won't be using these links during the presentation in case it causes the computer have a tantrum. Also a reminder, if you have any questions on topic 2, please send them through and do not wait till the end. But first a disclaimer. This is further to Stuart's earlier disclaimer. Just an important note with overseas donee status that such decisions are a decision for government ministers and Inland Revenue only plays a supporting role in terms of providing advice to assist with that decision making. So what is overseas donee status? Overseas donee status has existed since 1962 when Parliament enacted rules giving taxpayers tax benefits for charitable giving in the form of donations and money. At the time, provision was made to add New Zealand charities with overseas purposes to the law books as the case required. The tax law changes in 1962 are the basis for the current rules which we know which exist in the Income Tax Act 2007. The modern incarnation of the 1962 decision can now be found in Schedule 32 of the Income Tax Act. So what is overseas donee status? It is effectively a request by a charity for a law change. This means it's a policy decision, it is made by government ministers, and legislation is used to implement that decision. The benefit for a charity that is given overseas donee status is that donors are eligible for tax benefits for donations and money. These benefits are the donation tax credits for individuals and tax deductions for companies and Maori authorities. Overseas donee status is not a tax exemption. Tax exemptions for charities with purposes outside New Zealand will be discussed by Annette, who is speaking after me. It is important to note the business income earned by charities and applied for purposes outside New Zealand is subject to income tax. So why does overseas donee status exist? Earlier, Tanya spoke about the term wholly or mainly and the role it plays in the Income Tax Act to limit tax benefits for donations of money to charities with New Zealand purposes. Overseas donee status is therefore an exception to this tax framework and is limited to charities with specific humanitarian purposes that are carried outside New Zealand. So who can request overseas donee status? Preferably, you're a charity which is registered under the Charities Act. A charity should also be New Zealand resident. Now, what this means for trusts is that the majority of trustees are New Zealand resident. For incorporated bodies, including companies, the charity centre of management should be in New Zealand. The purposes of the charity should be directed towards any or all of the following activities outside New Zealand. The first being the relief of poverty, hunger, sickness, or the ravages of war or natural disaster. The second, activities directed at economic development of a developing country. The third, activities directed at raising educational standards and attainment in a developing country. These purposes are set out in a document which will be attached to your handout entitled the Cabinet Criteria. More about the Cabinet Criteria in the next slide. Listeners should note that the term developing country is defined by reference to the OECD's Development Assistance Committee, or DAC is short, which is a list of overseas development countries which are eligible to receive assistance. The committee supports the United Nations Sustainable Development Goals. The policy intent of overseas donee status is effectively to support charities in terms of its overseas development activities where those activities will be best carried out by non-government organisations. Effectively, it's an extension of the programs which are run by MFAT through their official aid development programs. The activities permitted under the Cabinet criteria is generally narrower than the concept of charitable purposes as defined in the Charities Act. And that's because the activities are focused on humanitarian, as I articulated earlier, in those three purposes rather than the broader concept of charitable purposes in the Charities Act. There are arguments for and against using the tax system to support charitable giving. Broadly, governments may support to promote charitable giving to further social objectives, in this case overseas development. Second, the charitable activity could have wider benefits to society, including externalities which may over and above the value of the benefit provided through the tax system. Third, donations can be an effective indicator when extra goods and services should be provided. That is, that there are good reasons for providing education facilities or the relief of poverty to further New Zealand's objectives. The trade-off for these benefits is the open-ended revenue cost for as long as the charity is on the list of approved donee organisations. As such, government decisions to give a charity overseas donee status is a spending decision. Requesting overseas donee status. Charities wanting to request overseas donee status should ensure their purposes align with the Cabinet criteria, which is highlighted in that link. For example, charities with religious purposes will not be considered. The officers of trustees of the charity should also be familiar with the guidelines for Schedule 32, which were endorsed by Cabinet in 2009. The Cabinet guidelines are a means for improving the quality of information provided in support of requests for overseas donee status. The guidelines also remind charities about their ongoing obligations if they're giving overseas donee status, and that includes the requirement to hold good tax records. Requests for overseas donee status can be submitted by completing an IR 464 form, which is highlighted, and providing the supporting information to the policyholder email address. Process. When a request is received by Inland Revenue, we will of course review the information with particular emphasis to the looking at the rules of the charity and the charity's financial statements. The person nominated to be the charity's representative will be contacted and a time arranged to have a short conversation about our initial impressions of the request. What you can expect. As part of our review and analysis of a charity, trustees and officers can expect Inland Revenue to make inquiries about the charity's goals and long-term plans, the relationship the charity has with in-country partners, how the charity operates, including internal policies relating to anti-money laundering and child protection. We also ask for documentation supporting any relationship the charity has with its in-country partners. Inland Revenue considers that memorandums of understanding between the charity and any in-country partners are an important governance tool, as they set out the rights and obligations between the parties and are useful for managing expectations. They also can set out an agreed process for resolving disputes if the relationship sours. Inland Revenue also considers the charity's sources of donation and financial strength, and this will include asking the trustees or officers of the charity for an estimate of future monetary donations. Trustees and officers can also expect that our review of the rules of the charity will typically result in changes to those rules. Excuse me. Also, the financial accounts of the charity also are reviewed to assess the charity's financial strength. A common concern we often identify with the finances of charities is that many seek to operate on with very low levels of reserves or funds. What else can you expect? If we identify any concerns or issues with the charity or its officers, these will be communicated to the parties concerned. Another thing to note, that Inland Revenue will also seek the consent of the trustees or officers of the charity to carry out a police vet. Overall, Inland Revenue's analysis of a request can take several months, and the overall process is lengthy. Approvals require government approval, and requests are usually batched for efficiency reasons before they are taken to ministers. There's also the matter of the timing of relevant taxation bills to implement the decision. So why is the process so involved? 2 words: risk management. Remember that overseas donee status is an exception to the policy and legislative framework which limits tax benefits for donations of money to New Zealand purposes. As such, and I've said this earlier, decisions to give overseas donee status are spending ones, and government ministers want assurance that the charity is credible, transparent, and accountable. The link there will take you to the press statement which supported the Schedule 32 guidelines in 2009. There are also other policy considerations which are taken into account. First, does the charity's activities present a reputational risk to New Zealand? For example, are there trafficking concerns that the charity has not adequately addressed or taken steps to mitigate? Another example is if the charity's activities raise concerns from a money laundering or a terrorism financing perspective. Second, the integrity of the tax system is considered. Could the charity's activities be part of a wider tax avoidance arrangement? Managing these risks take time to ensure the tax relief afforded by overseas donee status is appropriately targeted and the potential for misuse of public monies is minimized. My apologies. Thank you for listening. I'll now hand you over to Annette. Oh, sorry, questions. Okay, first question, can you lose overseas donee status? Yes, it is possible to lose overseas donee status if the charity is found to be operating illegally or inconsistently with its purposes. The general process is that we'd be reporting to ministers with a recommendation that it would be removed. The second part of the question is, if you don't meet it, do you have to tell IRD? Generally, we'll find out through other sources, but if you are in the process of winding up or you're wanting to change your purposes, it is generally useful to let IRD know in the first instance. Does this affect charities who don't receive donations? Answer yes and no. Because overseas donee status is directed at tax benefits for donations and money, it's mainly relevant for those who have a strong donor base and want to basically grow or encourage their donor base. Sorry, there's another question. And also because most donee organisations also have FBT exemptions. Is that all the questions? Oh, goodness me. Okay, my question, second question. My organisation's funding overseas missionaries. How will I treat the funds given to them? That's quite a technical question, probably merit a further discussion, maybe offline from this presentation. As I say, the funding of overseas missionaries is not a purpose which is allowed under the Cabinet criteria, and there are a number of options which a charity can explore, including setting up a separate charitable trust to carry out the humanitarian works. Can overseas donors apply to a fund? Sorry, another question is, can overseas donee status apply to a fund used exclusively in New Zealand? We have explored the question of funds, but for governance reasons and wanting to make sure you reduce the risk of intermingling funds and there's appropriate accountability, the preference is actually a separate legal entity which is set up, so that can be a trust or an incorporated body. So we have considered the issue of funds, but generally they're not considered to meet the standard required to take to ministers. Thank you for listening.
Good afternoon. My name's Annette Stenberg, and I'm a customer compliance specialist based principally in Whangarei. And my topic for today is to discuss the income tax exemption for charities. So we'll start off with the general criteria required. So We're not talking about donations. This is completely different. This is actually talking about the income that a charity actually receives. So registration of a charity under the Charities Act 2005 does not mean that a charity is automatically eligible for the income tax exemptions provided under the Income Tax Act 2007. Registration is, however, a prerequisite for the tax exemption on non-business income and for business income used for charitable purposes in New Zealand, with other criteria also applying. For instance, other criteria include that the charity is established and maintained exclusively for charitable purposes and not carried on for the private benefit of any individual. A registered charity is called a tax charity in the Income Tax Act. The tax exemption is an annual exemption on income, so the charity registration and charitable activity criteria must be continued to be met on an ongoing basis. And because the New Zealand tax system works on a self-assessment basis, the charity itself must annually review and assess its own eligibility for the tax exemption. So what is income? So once the charity is a tax charity, it then needs to consider the type of income that it has received in the context of its operations in determining whether or not the income is exempt from tax. The first question to be answered is the amount received by the charity income for tax purposes at all? For instance, if the charity receives only donation income, then that would generally not be regarded as subject to income tax, nor would a capital receipt from the sale of an asset not used in any business activity. If the amount is normally considered to be taxable income, then is it A, non-business income, or B, business income? That distinction is important because different tax rules apply to those types of income, which is particularly important if the charity operates overseas. The historical policy reason behind the distinction between non-business income and business income was that business income arises from operations undertaken in active competition with tax-paying businesses, and the tax-exempt charity obtains an advantage over competitors. Therefore, charities should not be allowed that advantage except for charitable purposes carried out for the benefit of New Zealand. So we'll firstly discuss the non-business income tax exemption. So Section CW 41 of the Income Tax Act 2007 provides charities with an income tax exemption for their non-business income. Common examples of non-business income are investment type income, such as interest, dividends, and rent. Royalties, although less common, would also generally fit into that category. Non-business income is exempt from income tax regardless of whether it's being derived for use in support of New Zealand or overseas charitable purposes. Business income tax exemption. Firstly, what is business income? The courts have reviewed the issue of what does and does not constitute a business for the purposes of the Act. The two main factors or considerations are the nature of the activities carried on and the intention of the person or the entity in engaging in those activities. Generally, it's obvious when an entity is in business, buying and selling goods and or services, but sometimes it's not as obvious. For instance, a charity may purchase shares with the intention of deriving dividend income. The income from the dividends would normally be non-business income, and the sale of the shares a non-taxable capital receipt. However, if the charity regularly buys and sells shares to derive income from the dividends and with the intention of making money on those share trading activities, then it is likely that the losses and gains on the share sales would be classified as business income. 2. The business income tax exemption. Under the Income Tax Act, a tax charity is exempt from income tax on business income it derives either directly or indirectly, so long as that income is applied to charitable purposes within New Zealand. And no person with some control over the business is able to divert that income from that business to their own benefit or advantage. Therefore, registration as a charitable entity is not sufficient in itself to qualify for the business income tax exemption. Registered charities must also meet the in New Zealand and no direct control private benefit criteria. Number 3, the 1st of April 2020 change. For completeness, the business income tax exemption can currently apply to business income derived by the registered charity itself or derived from a business activity undertaken by another unregistered entity for the sole benefit of that registered charity. However, from 1 April 2020, the business income tax exemption will only be available for the business income derived by entities who are themselves a registered charity. Business income tax exemption overseas charitable purposes. So where charities' purposes are not limited to New Zealand, the income is apportioned between those purposes within New Zealand and those outside, which are taxed accordingly. Only the income apportioned to the New Zealand charitable purposes is exempt income. So if the charitable purposes are wholly for overseas charitable purposes, there's no business income tax exemption available. If the charitable purposes are mixed, then there will be a partial exemption. The wording in the Income Tax Act is that the business income for the tax year is apportioned reasonably between those purposes. 3. What is reasonable apportionment? There's no direction in the legislation on how to practically apply the apportionment exercise, but there is some case law available to guide that apportionment. And charities should consider the following matters when looking at the reasonable apportionment. Where are the charitable purposes being carried out? It should be noted that where the charitable purposes are being carried out is not always the same as where the money is being spent. For instance, business income derived by a charity for the purpose of educating Pacific Island children will be exempt to the extent that the income is used for educating Pacific Island children in New Zealand. Income from the business used for educating Pacific Island children outside New Zealand would not be exempt. B. If your charity has mixed purposes, it is advisable that separate accounting records are kept accordingly. That will make the end-of-year self-assessment of tax process easier. It would also support any subsequent compliance checking. C. The exemption is for the charity's business income, but as part of that, we have to consider the expenses incurred by the charity in earning that business income, and whether or not those expenses relate to the exempt income or the gross taxable income. Consistent with New Zealand case law, we have a nexus test. That nexus test links together the income and expenses incurred in earning that income. So an expense is tax deductible only if it is incurred in deriving that particular source of taxable income. In cases where an amount can be apportioned directly, then it should be allocated on that basis. But where an expense serves two purposes indifferently, the best apportionment that can be made must be made based on the facts of the particular circumstances of that charity. Expenses related to the gross taxable business income will of course be able to be deducted from that gross income to arrive at the amount of taxable income on which tax must be paid, and that will be included in a tax return that must be filed by the entity for that particular year. So unless we've got any questions, I will now hand over to Stuart.
Great, thanks, Annette. I don't know why you let Annette off so easily. There could have been a whole lot of questions for Annette's session. Because it was quite important. I mean, a lot of people think charities are completely tax exempt, but as Annette just explained, they're not. And if you've got purposes that you carry out overseas and you've got business income, you actually have to pay tax on some of your income. So it's a common error that people make. I am going to do something completely different now and talk to you about student loan concessions for charities. From 2006, a charity's volunteers that are student loans borrowers and who volunteer overseas or work overseas for a token payment can avoid being charged interest on their student loans for up to 24 months. So this is a concession, and so it's important that people know about it so you can use it. The charity does not have to be registered under the Charities Act, so it doesn't have to be a registered charity, but it does have to meet the essential requirements of a charity, which means it has to be established and maintained exclusively for charitable purposes, and it can't be carried on for the private profit of an individual. The concession only applies to certain overseas work, and we've got an explanation of that on our website. It applies to work that improves the economic or educational standards of a country on the OECD list receiving developmental assistance, or it applies to the relief of poverty, hunger, sickness, or the ravages of war or natural disaster. So quite broad reasons actually, but we've got that listed on our website. A charity that is established for religious purposes may still qualify for this concession, and we do publish who has applied and does qualify. And you'll find on that list that the Presbyterian Church is there, the Salvation Army International is there, there's overseas missionary fellowships there. So religious charities can definitely apply for this. How does your charity qualify? So your charity can apply to Inland Revenue to be a listed charity under Section 27A of the Student Loan Scheme Act 2011. The good thing about this is before 2016, approval actually had to be made by Cabinet. But since 2016, the decision can be made by the Commissioner of Inland Revenue. So it's a lot quicker and easier to get approval. Inland Revenue does publish the list of approved charities. I looked this week, there's 89 charities that are on our website that have been approved for this concession. Once the charity has approval, then it's up to the volunteer to ask the charitable organisation they are volunteering for to write a letter to Inland Revenue on the charity's letterhead. There's more guidance on the Inland Revenue website, but basically the charity just has to list the volunteer's name, their IID number, the length of time they're expecting to spend overseas, the volunteer tasks the volunteer is expected to be undertaking, and also provide an estimate of what the gross income is of the volunteer, if any. Obviously it might not be any. So how hard is it for a charity to qualify? So when considering whether to approve a charity and list it, the Commissioner looks at several things, and you can see them on the slide. So we'll ask for the trust deed, constitution, or other documents, and you should provide those with your application. We'll look at the standing and credibility of the organisation. We'll look at whether it's recognised as a charitable organisation with an overseas tax authority or a government charity regulator. We'll look at if it's publicly accountable. We'll look at what monitoring and evaluation processes it has in place, and we'll look at what the accounting and record keeping practices are. So it looks quite bureaucratic, doesn't it? But actually it is a really useful tax concession if you do have students that are volunteering and they have student loans and they're going overseas. So it's worthwhile to think about if that could apply to your charity. So I'm not sure any questions have come up about this. It's quite a short topic, none that I have heard of from the team. So I'm conscious that we've still got 15 minutes. So before we do wrap up, are there any other questions that you'd like to raise? So if so, yeah, feel free to send an email to us. We've got Brandon carefully typing in some answers as we speak. Otherwise, so now's your chance to ask any final questions. But I'll just tell you about the wrap up. As I said at the start, this is one of a series of 3 webinars. So we've worked with our colleagues actually at the Ministry of Justice, at the police, and at Charity Services. So you've just got the tax one today. One in a month's time will be about protecting your organisation from terrorism financing. And that'll be quite an interesting one that's going to be taken by both the police and the Ministry of Justice. So keep an eye out for that. And webinar number 3 is how to detect and prevent fraud. I think that's actually during the the week where Charities internationally look at how to prevent fraud, and Charities Services is taking us a special webinar on that for everyone in New Zealand. Just because you haven't registered for the other webinars doesn't mean you can't. You can still register for them, and as you probably know, you can register them, and that's to our news and updates page, and there's a whole lot of other news and updates there as well. So if you don't already follow us on that page, I recommend you do so. If there's a tax law change or an interpretation, then we'll post about that on that site. I think, as Francesca said at the start, if you have queries that we haven't managed to answer today, then email us at charities.queries@iod.gov.nz, or you can phone us, and I've listed the phone number there, Monday to Friday and Saturday morning as well. So I think someone's passing me maybe some questions. That's very exciting. Oh, there's one for Annette there. See, Annette, you didn't escape that easily. Can you explain why oops, I've just lost that one. Can you explain why the proposed IRD rulings item about the charity business income tax exemption and the income from limited partnerships is about? Yes, so our rulings area answers technical issues and provides technical clarifications, usually in a questions we've been asked type format. And we have had questions about limited partnerships, and if a limited partnership if income from a limited partnership falls under the business income provision or the non-business income provision. So that's really what that clarification is going to be about. So you know, in other words, whether or not it's completely tax exempt if it's not business income, or if it could potentially be taxable if it's business income and you're carrying out some of your purposes overseas. So that's what that is about. I think Inland Revenue has in the past looked at limited partnership income and considered it to be business income, so therefore subject to the overseas limitations. But that will clarify the point for everyone. Would someone be able to talk about the donation certificates with money given overseas? That's a tough question, and I don't actually know the answer to that. And it's the same as donation receipts, says Brandon. Would you like to talk about it, Brandon? Or yeah, it's not something I've seen, but maybe if you you can get back to them. And if we don't get back to you, then just send us an email at that charities.queries email address. I have a suspicion I know what you're talking about, and we do get a few requests for certificates, so I'm sure we'll be able to get the right people to answer that. Is there any other questions anyone would like to ask? Will there be a recording sent out afterwards? Unfortunately, I missed out on the first part. Well, yes, the answer is yes. And I think, as Francesca said at the start, we will be emailing everyone who is registered for the series with a recording of today's webinar. Now, I think that's going out, is it the next couple of days? It's reasonably soon anyway, after today. So you will be able to see that. Someone said hello. That's nice, to Brendan, I think. So that's very nice. What other questions are there to answer? There's no others coming in. Oh, there's a thank you there. Thank you very much, Letitia. Okay, I could probably let you all go. So I hope this has been useful. Inland Revenue hasn't really done too many webinars, so if this is seen as successful, we'd be happy to do more. Oh, there's some complicated questions coming in now. Just at the end, charities operate increasingly internationally. Is there any relief under double tax agreements? I'm not sure what the answer is to that. We may have to get back to you or send it through to Charities Queries. Yeah, I'm not actually sure. And finally, I'm going to end on this one. How about the fund transfer from overseas to New Zealand for the charitable trust to use here for the project? So funds are transferred from overseas to New Zealand how will that have an impact? I don't think it would. I mean, I don't think New Zealand funds, if New Zealand funds aren't being used for overseas charitable purposes, then I don't think that won't have an impact on your donee status or your income tax exemption. So no, that's all fine. Okay, can we do more of them? Thank you very much for raising that. So I'm sure we'll be able to do some more in the future. Everyone's smiling, so that's really good. Okay, I should really let you go. Thank you everyone for listening, and don't forget to sign up or join the webinars that are coming up in the next couple of months. All right, have a good day. Thanks everyone. Bye.